Fund2000.com Real Estate Podcast. My name is Chuck Hamm, and today we're going to talk a little bit about co-tenancy and what it means to vest the ownership of property as a co-tenant and how that relates to how you buy property with roommates and family members and business partners. Qualifying for a mortgage is rarely one of those things that you would say is easy to do or is fun to do because there's a lot of documentation, and that's something that we help you with, and that's one reason why we're here for you. But in today's market environment with high interest rates and high home prices, it's kind of difficult. So today we're going to discuss one of the ways you can make it easier to qualify. Luckily, after the new year, interest rates have started to ease a little bit. They're still not what they were before, but they are easing and fluctuating up and down, and we do expect in 2023 interest rates to come down. Unfortunately, sales prices or home values are still kind of stable. They have flattened. They aren't going up as quickly as they had before, but in some parts of the market they're still going up. For the most part, they flattened, and in some parts of the market we've seen them coming down. But we're not seeing this flood of homes coming on the market that's causing pressure for prices to come down. So we have limited inventory, and low inventory means prices will remain stable most likely. And that's not good news for buyers. Despite all of that, with consistently high rents, it might still be better for you. You might save more money and have a better situation if you buy instead of rent. Rents keep going up. And we expect rents to keep going up because of the difficult lending environment and the high home prices. But again, the interest rates and high home prices, monthly payments, monthly obligations, they end up being pretty high. So if you don't qualify, what do you do? Well, that's what we're going to discuss today. One of the ways you can do that is to get a partner, a roommate, or a family member, somebody who can help you qualify. And then how do you do that? Because there are some legal consequences to taking a property together or buying a property together. Before you even get it to the point of discussing with roommates the potential to buy a place together, you might have some questions, and that's what we're here for. If the property seems like it might be possible but a little bit out of reach to buy, or you're just not sure, it's probably close enough for you to consider an application with our office. And worst case scenario, you don't do anything, you don't make a purchase, you don't try to qualify for a loan. We're happy to talk even if there's no sale upside for us. We want to help you. Or another scenario is that you barely qualify and maybe you want to just watch rates or home prices for a while. Well, it's a good idea to get your application started so we can look at these questions right now, and rates are fluctuating. So a little bit of change in interest rates can go a long way, or a little bit of change in home prices can go a long way with your monthly payment obligations. And sometimes loans and loan applications and the documentation process for you might be a little bit rigorous and might require some preparation on your part. Maybe there's some credit repair. These are questions we want to take care of with plenty of time in advance, so that when the property or interest rates become ideal, when the property prices have come down or the interest rates have become ideal for you, you don't want to be stuck trying to do income documentation. You want to be prepared for that scenario in advance. Most people need this free consultation and time to discuss what the lending options are to get fully informed in order to make a good decision and consider all your options. I think it's important for everybody to know that with our office, starting a mortgage loan application is free. You don't even have to start the application. You can, if you want to. You go to our website, fund2000.com, and you can just check rates. You can see what kind of loan options and what the payments are going to be for particular scenarios. You can also just talk to us directly, and we can set up a time to talk on the phone or in my office. At some point along the way, we do hope to get your business. That's why we do this. We do want to help people, but we have to pay the bills, and we get paid at the closing of a transaction. So unless we close, we don't get paid. By the time we get to the point where you do make an obligation, you will have been fully informed and ready to make that commitment. You'll have decided what options you want to pursue. You'll know what your payments are going to be, what the interest rates are probably going to be when you lock them in. But before getting there, we're going to have to know how much house or loan amount you qualify for, what kind of down payment you're going to have to come up with, what the cost of the transaction are going to be. You're going to want to know what your additional monthly obligations are going to be, because there's more than just a mortgage payment. There's going to be probably some kind of insurance requirement. There will be property taxes. You'll also want to know what kind of loan program fits best for you. Maybe you don't have a down payment. So for example, you might need a down payment assistance loan program, and we have those. We have lots of those. If you do have a down payment, then we want to strategize on how to get you the best interest rate and figure out those questions early on. If you're self-employed, we're going to want to get a head start on documenting your income. If you have low credit, then we probably want to do some credit analysis to figure out if there's a way to increase your credit rating, or just take it as is. We can take any borrower's credit score. We have FHA loans and other loan programs, but mostly it's FHA loans that have no FICO credit score requirement. So those are some of the things that we do all up front for you with no cost or obligation. If we have to run a credit report, we usually try to not have you pay for that up front. It's like $40. You can pay for it. You can also just wait to pay for it at the close of the transaction. We do this so that it can be easy for you, to help you, to encourage you to consider this option. We want you to feel like you have some hope here and make it as easy as possible for you so that you do buy a house. We don't use hard sales tactics. We use a consultative sales approach. We don't want our sales pressure to be what makes you choose to make whatever decision you make. We want the information you receive to be the motivating factor for your decisions. So what happens when you go through the pre-qualification process and you realize that you don't have enough income, and you realize you don't have enough income to qualify for the property you want or the property you think you want? Well, now we're going to start talking about co-tenancy. You can get a roommate, a business partner, or a family member, somebody who has some income that can be documented and become a part of the loan. You'll be submitting this application together. Sometimes people think that if you're a co-signer or if you're secondary in some kind of way on the purchase or on the transaction, that there is less to do on the loan. Well, that's not true. Every borrower that ends up on a loan application is going to have to go through the same documentation and underwriting process in order to qualify, and in order to be able to use that income. And there are lots of people who do this. Most people know that a married couple, if they have two incomes, they use both incomes, and we do this. We qualify both the parties on both their incomes. Business partners do this all the time as well, and underwriting and documentation of the income it's all the same. Sometimes we use 3 and 4 incomes to qualify a mortgage. In order to qualify a mortgage, you have to document enough income for the property that you're purchasing. If you have a property in mind that seems out of reach, but perhaps you have a roommate or a family member or somebody who can go in on it with you, then we include them. We start with them early in the pre-qualification process. We don't want to get started late. So get them involved in the discussion early. You can bring them to our office. You can include them on our Zoom call or phone call. Each borrower has to go through the same documentation and underwriting process. The debt and income of every single borrower involved on a loan has to become part of the loan application. Different loan programs have different debt to income ratio limits, but for example, FHA loans, which are the easiest to qualify for, have a debt to income ratio of 43%. That includes the housing payment. That 43% is not a hard number if there are some compensating factors. So for example, if you have cash reserves or low expenses, then maybe instead of a 43% debt to income ratio, we can go higher. And it's going to depend on the loan program and on the borrower. Let's say that you want to buy a house. Maybe it's a house that you already live in, or you want to buy. You qualify for a loan and you find out that your income's not enough for the loan amount that you're going to need. This is where you start talking to other people, roommates or family members, or somebody who can be a co-tenant. Now, co-tenant it sounds like a roommate, doesn't it? But it's not a roommate. A co-tenant is a way that you classify the ownership of the other person, or both people. A co-tenant can be somebody who lives in the property. It could be somebody who doesn't live in the property. It could be a family member who lives out of state. It could be a co-signer. It could be a business partner. The roommate scenario works out great for a lot of people because they have an interest in the property and they live in the property. It's easy to get money from them, and they usually want to keep the costs low because it's their costs. The thing that doesn't work out so great with roommate situations is that what happens at the end of the roommate relationship. You have to have an exit strategy. People's plans change. You're not always going to want to live in the same place forever, probably. If you're in a roommate situation, that might mean that you're dating somebody else, and maybe you decide to get married, for example, and you move out. Well, it's not really that big of a deal, but you just need to have an understanding so that there's no surprises. So the main point here is that before you get into the transaction, you want to discuss the exit strategy and discuss all the possible options and all the different possible things that can happen and have a plan in place. So what is vesting? Vesting is how you take title to property. If you are an individual owner buying a house or a property, on your own, then you take title in your name. It's very simple. John Doe. You might have a trust though, and you might put the name of the property in the trust. So you might call that trust the John Doe Family Trust of 2023. This simply means that the owner of that property is the name of that individual or entity that you state. Vesting is what shows up on the title search. There are different kinds of vesting. So like I say, you can be a sole owner. It can just be your name as an individual owner. Married couples often use what's called joint tenancy, or they take the property as joint tenants. Joint tenants usually agree before it, they should be fully informed. Sometimes people make mistakes on vesting. That's why this is important, because it affects your rights at the end of the transaction. Or joint tenants agree that if one person dies, the other person takes full ownership of the property, and that's called right of survivorship. So if you don't want to grant to the other owner a right of survivorship, then you don't want to be joint tenants. And this is a discussion for you and your lawyer, because again, you have many options for how you can legally vest and hold property. But let's say that you just don't include any vesting at all, and you just list you and your partner as the owners of the property. Well, in that case, in California, the default vesting is known as tenants in common, or tenancy in common, or co-tenants. So if you are John Doe and your partner is Jack Doe, you guys are roommates or whatever, and you buy property together, and you don't list co-tenants, so you don't list yourselves as tenants in common or co-tenants or joint tenants maybe, then if it just says John Doe and Jack Doe, then you are by default co-tenants. Co-tenancy is another way to vest property ownership. If you and your roommate want to buy a house, for example, and you don't want to be joint tenants because you don't want to give each other right of survivorship, then that's probably what you want to do, is to be co-tenants. Roommates purchasing property together would end up being more like business partners and taking separate interests in the property. Now, taking a separate interest in a property does not mean you're going to divide the property. It just means that each one has their own separate interest, and there's no right of survivorship, and that if one of the roommates were to die, then their interest in the house or in the property would pass on to their heirs or their family or to their trust, or however they have decided how their testamentary succession is going to go. Worst case scenario, it gets probated in the courts. Let's say you don't have a roommate, but you have someone who is willing to invest in property with you, and you trust that person. This is important because co-tenants don't actually have to be roommates. You don't even have to be in the same state. If you have a friend, a family member, or a business partner that is willing to share the obligations in exchange for the investment value of the property, that's great. That's what you're looking for. They don't have to make payments, but they can. They can help you in the payments, but it's not required. You can just get them on the loan application and get qualified, and then be done with the day-to-day discussion, because you guys agree that you yourself are going to handle the entire transaction, because you yourself are going to handle all the operations, all the monthly obligations, the maintenance of the property, and so on. We see this happen quite a bit in our real estate market. It's frequent for somebody to need the help to qualify for a mortgage. But like I say, every borrower will be qualified, documented, and underwritten separately and individually. It is more work for our office, but that's what we do. And we do it because that's what needs to be done, and we're happy to do it. Also, there's one other note here. The sales contract, when you decide to purchase a property, you need to get the lending and financing terms and provisions on the contract properly. And that's why our office is good at this, because we have almost 20 years in sales experience. We understand loans, and we know how to properly state what the loan terms are. We know how to negotiate these terms as well, and also manage the transaction and coordinate with escrow and everybody that's involved with the loan from beginning to end. There are a lot more details to consider, but the main point for today is consider all your options. Don't just decide to not buy property because you don't qualify. Look at all your options. You might have roommates, you might have family members, you might know somebody who might like to buy property, but they don't really want to manage the investment. Well, that's a great situation. If you know somebody like that, get them, start the discussion. We can start the discussion together if you like. Check out our website for lending. It's Fund2000.com. That's Fund2000.com. And our sales website is sold2000.com, Sold2000.com. We do sales and loans all over California. We assist regular people. We assist investors, attorneys, and their clients, businesses, and everyone with their sales, leases, loans, court-related transactions like divorce transactions. And we do all kinds of small real estate related services, such as recording documents. No job is too small for our team. We want to help. Reach out anytime. Thanks for listening.